All aboard the NVIDIA train, destination STONKS. Hi, and welcome to another episode of the Short Talk Markets podcast, the weekly podcast with new episodes released every single Sunday that breaks down what's happening in US markets and why, in plain, simple English. So if you are a beginner to trading or investing, or if you're interested in markets or in economics, and you're looking and things don't make sense when you look at the headlines, subscribe. I'm going to be breaking down everything that happens on a weekly basis for you to stay up to date on. And this week, of course, the big news was the NVIDIA quarterly earnings. And if you have been living under a rock for the last few years, NVIDIA is essentially the spearhead of the AI revolution we're seeing in the stock market. It is the spearhead of the AI rally that we saw last year. And I'm going to get into all of that on this week's episode. And this is an incredibly important, broad point that you must understand if you are investing in US stocks right now when looking at markets and the economy. This is an incredibly important episode. So please stay tuned. I'm going to break down what happened this week in economic data we had and Fed statements we had. The Fed minutes were released on Wednesday. So I'm going to be breaking that down for you, what it all means and why the stock market's going up, as you can see here, at all-time record highs. So before we get into this now, if you're listening to this on YouTube and you want to listen to this on the go, please know you can listen to this as a podcast episode up on Spotify or on Apple Podcasts, blah, blah, blah. If you want to listen to this on the go, on a drive, walk-in, whatever, it's available as a podcast for you to download on Spotify, Apple Podcasts, wherever you get podcasts. Alternatively, if you did find this as a audio podcast, please know this is a YouTube video at New Sky Bay on YouTube. Please go there to check it out if you want to see the graphs and charts I'll be discussing in this episode. You'll probably get far more value from it watching on YouTube. So with that being said, let's get into the content. So as I said in the intro, briefly, the enormous talking point this week, what really moved the market this week was the NVIDIA quarterly earnings report and forward-looking forecast. Probably more so the forecast than the results, although the results were fantastic. And here's NVIDIA's stock price going all the way back to 2019. And just to really show you how insane this is, let me change this to percentage, right? We're looking at close to a depending on obviously where you draw the line from when you started, this is a 2,000% gain on NVIDIA stock since 5 years ago, right? Going back to February 2019. This is an enormous growth for a stock. Why? What is NVIDIA? What does it do? NVIDIA is essentially the flagship of the AI boom. Okay, so NVIDIA creates the chips that not all, but most AI uses. Right, so it's the hardware that AI operates on. So as ChatGPT basically took the world by storm last year, just before last year actually. Speaking as someone who was at university at the time, I can tell you it was actually more like November 2022, December 2022 when things really took off with ChatGPT. And then since then, AI has just been the talk of the town, and the stock market has really put its chips on AI being a winning bet. And so NVIDIA supplies the chips, or it's sort of the creme de la creme of the chip suppliers. So it's the flagship of the AI boom, right? And you can see this in how the stock market performed not only this week, here's when the report came out, post New York trading Wednesday night here in London time, obviously just after the closing bell New York time, so Wednesday afternoon for the Americans on the East Coast. Here's how the stock market looked over the last 5 years. This was the COVID crash and the eventual rally. This was the inflation spike in the Fed hawkish cycle. And then the stock market rallied all of last year. And what was an enormous catalyst for this enormous spike up we saw at the mid of last year, or just towards the end of Q2, was the AI boom, right? It just sent stocks and the entire stock market as a whole just to the moon. Extraordinary growth we saw last year, right? Big tech has led the way. If you've been tuning into the financial headlines, you've heard all about the Magnificent Seven, which is arguably the Magnificent Six these days, with Tesla falling off. But big tech companies, NVIDIA most of all, have really done well over the last few months and years because investors and markets are really pricing in this AI boom, right? So, and you can see this in the NVIDIA stock price. Just at the end of May last year, that was when the blockbuster earnings report, the first of these blockbuster earnings reports, came in that said, basically, look at how many chips we are selling and look at how many we are forecast to sell. AI is taking off. That was when that first blockbuster earnings report came through, and that just sent NVIDIA through the moon, and markets just got high on the AI hype, right? That's just to get you up to speed if you've been living under a rock. And what we had this week was another enormous boom, right? We just had fantastic news, and I'm going to pull up the headline figures you need to see here. This is taken from NVIDIA's website. So the record quarterly revenue up 265% from a year ago. Data center revenue quarter on quarter up 27%, and from a year ago 409%, and then full year revenue up 126%. So just absolute stonks, right? NVIDIA is in high demand. NVIDIA's chips are in high demand. Everyone, enormous tech companies are buying chips from NVIDIA. This is making the company extremely profitable. It's growing extremely fast, and that's why it's earning tons of money, and that's why its stock price is flying through the roof, as I showed you earlier. Wait there. Let's just see how much. We can even cut it down to this year. Let's see where it got from. This is a weekly view of NVIDIA stock price. Okay, so just when the November rally kicked off, it's gained 70% since this November rally we've seen. This is the stock market as a whole, the S&P 500. At the end of October, the rally from economic data began, and dovish Fed expectations were solidified. That sent the market as a whole up. And you can just see since the end of October here, NVIDIA has just climbed. Okay, so that's just to get you up to speed on what the situation is. So why is NVIDIA driving the entire market higher? Right? Why did the stock market the entire stock market as a whole go flying up this week on one company's earnings? Well, it's exactly what I just said. NVIDIA is the flagship. It is the spear tip of the AI boom, right? So goes NVIDIA, so goes the AI hype, because it's sort of seen as the dominant supplier of the hardware that fuels this AI revolution. So long as it's still in high demand, it follows that AI is in high demand. It follows that AI is still the growth bet of the century. And markets are loving it. Okay, so NVIDIA's results came out here. It was just after, what you can see here, just after 8 o'clock London time, Wednesday night. Boom, up it goes, right? Markets loved it. And just to get you up to speed, here's where we're at on the last 12 months of trading. Here's what the entire stock market as a whole is doing. Just to focus it in here. Again, just to catch you up to speed, end of October, the stock market has pretty simply gone up, okay? Markets are optimistic. And what I'm going to spend the rest of this podcast explaining to you is why that's the case. And there's a few things we need to get into. The first is the Fed minutes that were released. And then there's also a tiny bit of economic data that came out this week, which really supports the Fed case and the market case. And so if you're new to trading and investing, or if you're new to the narrative, the commentary of what's happening here, markets for the last year and a half have been wrestling with recession expectations and how inflation is going to come down. Okay, so markets were expecting, for the longest time, markets were pricing in a recession. A mild recession was going to hit the US, growth was going to come down a bit, and that was what's going to bring inflation down too. Okay, the so-called hard landing, where the economy drops to bring inflation down. Okay, but consistently what we've seen over the last 6-7 months is that it's not looking likely as of right now that a recession is happening or is going to happen imminently in the US, bar some kind of financial catastrophe. All of the economic data we've had over the last few months has been incredibly positive. GDP growth numbers have come in incredibly strong. The labor market data coming in has shown employment is incredibly strong. Company earnings so far have been very, very good, NVIDIA being, of course, the flagship of that. But not only that, there's other companies such as Facebook that's released its first dividend. That just brought so much investment into these enormous tech companies that's just driven the overall market higher. But the economic outlook in the US is looking fairly positive. Okay? The economic outlook is looking fairly positive. It's a bit awkward, and growth is maybe a little bit too hot. The labor market's maybe a bit too strong, and inflation is staying entrenched. If you didn't tune in to last week's episode, definitely go check it out. I break down everything you need to see, the core numbers, the headline numbers, inflation, CPI inflation, PPI inflation. I got into all of it in the previous week's episode. Check it out. I'm not going to go over it again. And of course, subscribe to stay up to date. But the outlook's looking fairly good in the US, all right? The economy as a whole, in speaking in macroeconomic terms, is doing just fine. It's weathering the high interest rates from the Fed. Inflation is inching down, okay? And the stock market's just like, okay, well, if the economy isn't going to have a recession, quid's in, basically. And so that's what's really been driving this rally here. We've had the dual blessings of the Fed saying we're pretty certain that we're done with hiking interest rates, and likely the next move we're going to take, which isn't a hold, is going to be a cut. Economic data has been cooling off whilst staying fairly strong in terms of growth. And what this is called is the soft landing. Right, so you have the hard landing where you have a recession to bring inflation down. And what we've actually seen over the last few months is data that implies a soft landing is happening, where inflation comes down without a recession, meaning no massive spike in unemployment and companies going broke and people losing money and jobs. It doesn't look like that's the case right now. So we've had this blessing of the Fed saying, we see the soft landing happening. And the markets have, as you can see here, the markets have just absolutely loved it. Okay, just to kind of go to the start of this rally here. This is the S&P 500, just to remind you. The S&P 500 since November has, look at that, just gone flying up. Here's that October reading here. So this is when the rally started, up over 20%. And this is the entire market has gained 20% of its value in the last few months. Okay, so stock market is incredibly optimistic. NVIDIA is looking incredibly optimistic. Tech's looking strong. The AI boom is well underway. The stock market's going up on this good, positive economic outlook. Fed dovishness, meaning less aggressive monetary policy, meaning, in simple terms, interest rates coming down, which is great news for the stock market, this is what you get. This is exactly what you get. An enormous stock market rally of over 20%. All right. So really quickly, I'm not going to waste too much of your time here. That's just to get you up to speed on what's going on. That's the situation. Markets are hopeful of a soft landing. AI is booming. Big tech's looking very, very healthy right now. The stock market's going up, right? Now, we're going to nerd out here a little bit, and we're going to go into the Fed minutes that were released this week. And if you have no idea what this is, you really, really do. Right? If you have no idea what the Fed is, you need to go and do a good 2-3 hours of research right now to go and research what the Fed is. Because if you're trying to trade or invest without understanding the Fed, without understanding the implications of monetary policy and the Fed's balance sheet, and you don't understand how this influences bonds and the stock market and the dollar, you're trying to sail a boat without understanding what the sea is. Right? This is incredibly important stuff. I'm going to nerd out a little bit here, but try and follow me if you can. I'm going to try and break this down in as simple terms as possible. But what you're about to see now are the minutes of the FOMC meeting from January. So the Fed meets every 5-6 weeks, and they basically come together. They discuss the economic outlook. They decide on interest rates and the balance sheet, which is how many bonds the Fed is buying and selling or holding. And they make a decision on these things. And then a few weeks after that meeting, the minutes are released. And the minutes are the notes taken by Fed staff that basically detail what these people discussed. Right? So this is an insight. This is a direct look into the mind of the Federal Reserve. What is the Fed seeing? What are they thinking? What are they looking at? Okay, so I'm going to go into this now and just highlight the bits you need to know. Basically, here we are, right? I've read the whole thing, and I'm just going to summarize it for you briefly here. These minutes basically say that the economy is doing much better than previously thought, right? GDP is strong, solid for the fourth quarter of 2023. It's still solid. It's good enough. It's not cracking. It's doing well, okay? So here's a key sentence you need to see at the top of this staff economic outlook paragraph here. The economic forecast prepared by the staff for the January meeting was slightly stronger than the December projection, as the upward revision of 2023 GDP implied by incoming data boosted the level of output throughout the projection period. So what they're saying is, at this meeting, Fed officials saw the economy doing slightly stronger than at the previous meeting, okay, in terms of GDP. And I'm not going to waste any more time on this little stuff here, because let's be honest, no one on YouTube has the attention span to get into this. If you do want to hear more and more about it, you're going to have to subscribe to my newsletter, and you can join my private Facebook group, link in the description. But here's the key bit here: participants' view on current conditions in the economic outlook. So these participants means FOMC, Federal Open Market Committee participants. These are the people who vote on interest rate decisions. Chief of all is Jay Powell, chair of the Fed. Here's this first sentence, which really summarizes the entire thing. In their discussion of current economic conditions, participants noted that recent indicators suggested that economic activity had been expanding at a solid pace, right? Solid being the term that just pops up over and over and over again whenever you're trying to decipher this Fed speak. Solid means good, right? It's strong, it's stable, it's not cracking, it's solid, it's there. The Fed sees the economy as, quote unquote, literally, solid. Here is another key term, it's another key sentence here. Regarding the economic outlook, participants, meaning people who vote on interest rates, judged that the current stance of monetary policy was restrictive and would continue to put downward pressure on economic activity and inflation. Accordingly, they expect that supply and demand in product and labour markets would continue to move into better balance. What does this mean? This means that the current interest rate policy the Fed has set is doing its intended purpose, according to FOMC participants, right? So the FOMC members here are saying interest rates are doing what they're supposed to do. They're combating inflation whilst slightly hindering growth here. Okay, so this is another key sentence here. Participants observed that longer-term inflation expectations had remained well anchored at a level consistent with the committee's 2% inflation objective. So this means they see inflation coming down to 2%. They are optimistic. They think that interest rates and monetary policy is having its intended effect of bringing inflation down. The Fed, these minutes are saying they're optimistic. They're good. Here, I'm just gonna, if you take nothing from this video, let it be, apart from one thing, let it be this sentence here. In discussing the policy outlook, FOMC participants judged that the policy rate was likely at its peak for this tightening cycle. Right? The Fed is signaling here through the minutes, no more interest rate hikes. We had taken hints from this previously. Jay Powell had hinted at it in press conferences, and other FOMC members had hinted at it in speeches, but this is just saying in black and white here in English. You can see it. It's up on YouTube. It's up on the Fed's website. Policy rate was likely at its peak for this tightening cycle. Okay, so interest rates probably, likely, unless there's shock data coming in, aren't going to be going higher. It's simply a case of how long they're going to stay there, right? All right, so I'm not going to waste any more time on the minutes here. Those are just the key sentences you need to know. This is what the Fed's thinking. They're optimistic on the growth side of things. The economy is quote unquote solid. Inflation is coming down. They are optimistic about inflation coming down, particularly in the long run. And just to draw your attention to this sentence one more time. Participants judged that the policy rate was likely at its peak for this tightening cycle. Meaning, one more time, interest rates likely, as the Fed says in black and white, as they have signaled as well. No more hikes. It's just a case of when the cuts will come to the interest rate. Okay? So that's the situation with the Fed, an incredibly important element of the market picture. We didn't get much data this week. It was fairly dry. And you would have known that if you were subscribed to my newsletter, where I send out the weekly briefings of what to look at for ahead. Link in the description. Here is the one piece of data we did get. And this is the initial jobless claims reading. So this was the week we just had. Wait, let me just show you this. This was the reading we just had. So the backdrop to this economic outlook we've had this week, and to be fair, over the last few months, is that the labour market has been incredibly strong. And in plain English, what that means is that people are getting jobs. The businesses are hiring people. There's more jobs than there are people to work them, right? Despite some of the memes you've seen about how the economy is in absolute ruin, the labour market, the bedrock of the economy, people getting jobs, businesses hiring people, growth in that regard is doing incredibly well. And every single week we get this reading here, the United States initial jobless claims. So this is a weekly reading of how many people are claiming to the US government to get benefits, or I'm not sure, I think it's for my American audience, I'm pretty sure you call it welfare. But it's basically how many people say to the government, I'm unemployed, I need money. Okay? And as you can see, so this is data over the last 12 months. The reading we had this week was one of the lowest we've had over the last 12 months. And over the last 12 months, we have seen unemployment consistently shock expectations. Unemployment has been record low. It's been incredibly low, below 4%. The last reading we had, I believe, was 3.7%. Not sure entirely off the top of my head, but it's been below 4%, which is historically very, very low. And what we had this week, this reading here, was another low weekly reading of the unemployment claims, which indicates that unemployment is staying low. Okay, which means strong labor market, which implies strong economy, at least solid in its growth outlook. All right, so that's just to nerd out with the data we had this week and how all of this translates to the stock market going up. Just to summarize everything we've had over the last few months and weeks. This week's especially, we had that great NVIDIA report, which just threw momentum into the AI boom again. We had that strong unemployment claims number, and we had the Fed minutes that said, although inflation's a little bit awkward, the economy's strong, and we are confident that inflation is going to come down eventually. And that's what you get. That's why the stock market's going up. That's why it's at all-time record highs. This is what we're seeing. So thank you so much for tuning in to the Short Talk Markets podcast. It really means a lot to me. If you did enjoy this content, please subscribe and like this video. It does absolutely loads for me on the old YouTube algorithm. And of course, if you listen to this as an audio podcast, please check it out on YouTube. Before you go, if you are interested in this content, if you find value in this content, this is just a drop in the ocean of what I can give you with my newsletter service and private Facebook group. Here is the report I sent out last week. So this was after the inflation data. All right, so again, if you took value from this content here online, this is just a drop in the ocean of what you can get if you subscribe to my newsletter. You also get access to my private Facebook group where you can join a community of like-minded people interested in markets, where you can ask and answer questions, start discussions, join in on discussions, have direct access to myself. Here's what you get, right? So here's one of the reports I sent out last week, the weekly report. Awkward inflation halts stock market rally, but optimism can be seen. Here's what you had, right? So I break down what's happening in markets every single week, how the bond market's moving, how FX is moving, breaking it down in plain, simple English for you to know, breaking all the data you need to know. But what I believe the main selling point to this newsletter is the Squawk service that I have. So this is all like a deep dive into the data we had in the week, and also especially a briefing of what is to come in the week ahead. So minutes after data comes in, you get my newsletter straight into your inbox, breaking down exactly what happened, what the data shows, and what you need to understand, right? So I show you the data here, and I just explain, what does this mean? Okay, and I annotated charts, and you can get this in your inbox minutes after it happens, so you can just stay up to date, just easily digestible information for you to understand what's going on, what's moving in markets, and why. All right, so if you are interested in having this directly in your inbox, please consider subscribing to the newsletter. You also get access to the private New Sky Bay Facebook group for just £10 a month. So thank you so much for tuning in to the Short Talk Markets podcast. It's been awesome. I really look forward to doing next week's one, and I hope you guys enjoyed and took some value from this analysis here. Again, before I go, please consider the newsletter, and I wish you all the best of luck in your trades or investments over the next few weeks and months. Thank you so much for tuning in. Stay reasoned, and I'll see you in the next one.